Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states, including the one that you're sitting in. This topic today is part of the series that we're doing on how to buy an annuity. And no, this isn't some veiled sales pitch, but yes, I do sell annuities. Yes, I would love to speak with you to see if an annuity type is right for your specific situation to solve a specific goal. But our How to Buy Annuity series covers specific topics. Today's topic is about annuities inside of an IRA, a non-IRA, and a Roth IRA. So we're going to go through each type, how it works, and why you might consider putting an annuity type inside of those structures. But not until this. Okay, so the first thing that we have to cover are all of the advisors, master of the universe, and journalists, and all these ads you might see out there that say, "You'll never buy an annuity, never put an annuity inside of an IRA. Never, ever, ever." That's so uninformed and stupid, for lack of a better phrase, I can't even see straight. Because the funny part about people saying, "Well, never put an annuity inside of an IRA, Stan," is because there's an annuity type called a qualified longevity annuity contract that was designed and introduced by the IRS and the Department of the Treasury for use inside of a traditional IRA or IRA type accounts. Hello! So that just debunked that. So talking about annuity types inside of IRAs, first of all, you just can't say the word annuity and it's all encompassing. Annuities, many different types. There's single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, fixed indexed annuities. There's variable annuities of which we don't sell, disclaimer, and then there's income riders that can be attached to indexed annuities. So there's a lot of different types, a lot of different strategies, a lot of different ways that you can use them. So when I'm talking about all these account types, I'm talking about all of these annuity types as well and how they fit. So inside of an IRA, let's just say your traditional IRA, you can have an immediate annuity or deferred income annuity, a multi-year guarantee annuity, indexed annuity. You can have all of those in there. The difference is when you take money out of an IRA, you take it out and whatever you take out is taxed at ordinary income levels. Same thing with annuity. So why would you put an annuity inside of an IRA? You put it in there for the contractual guarantee. You own an annuity for what it will do, not what it might do. And the will do are the contractual guarantees, and the might do is the hypothetical, theoretical, back-tested number nonsense, agent hopeful return scenarios that, well, if you owned it like this, if you owned it 10 years ago, it could do, it might do, it possibly could do. Crap. You own it for what it will do, not some unicorn chasing the butterfly, proposal. Anyone can juice numbers on a sheet of paper. The bottom line is you never buy an annuity for that. You really never buy an annuity for market growth, in my opinion. Annuities are transfer risk contracts. So inside of an IRA, you're transferring the risk. So immediate annuity, you can use there for lifetime income to start immediately. Multi-year guarantee annuities inside of there for guaranteed interest rate, like a CD. Indexed annuity, CD type returns inside of an IRA. Absolutely. Deferred income annuities you can have inside of a traditional IRA, but the income cannot start, it can start up to age 72. Past age 72, if you want income to start, then that's a qualified longevity annuity contract. So I've just debunked all the people out there that say, "Never put an annuity inside of an IRA, Dad." That's dumb. It's stupid. It's uninformed. It's misinformation. And these people need to stop talking about what they don't know. I'm not giving people advice on how to achieve greatness in ballet because I don't know anything about it. So they need to do the same thing with annuities. So let's talk about non-qualified, non-IRA, checking account type money, all right? Checking savings account type money that's already been taxed. Can you buy annuities using that? Absolutely. That doesn't mean you have to, but you can. So with single premium immediate annuities, deferred income annuities, those are lifetime income products, all right? And the lifetime income is a combination of return of principal plus interest. So in a non-IRA account, you're not going to pay taxes on the return of principal. You will pay taxes on the interest. And you can go to my site at theannuityman.com and run quotes on my SPIA calculator and DIA calculator to see, and it will show you the total income amount and then the taxable portion if it's a non-IRA account. Now, you can also buy indexed annuities and multi-year guarantee annuities in non-IRA accounts, and the growth, the interest rate growth with those products are going to grow tax deferred in a non-IRA account. Now, once you do decide to take money out, it's last in, first out accounting, LIFO, gains first, and it's taxed at ordinary income levels. And that's for the non-qualified, non-IRA account. Now, obviously, qualified longevity annuity contracts are used just inside of IRAs. Can income riders attached to indexed annuities be used in non-qualified? Okay, absolutely. They absolutely can, and you can get income from that non-IRA asset, and that income coming out when you start taking it is, once again, last in, first out, gains first, and you're going to pay at ordinary income levels, that money that's coming out, that income stream. So we've covered IRA, we covered non-IRA, so let's talk about Roth IRA. Now, in my opinion, Stan the Annuity Man, America's annuity agent, and having managed money at very high levels at Dean Witter, Payne Witter, Morgan Stanley, and UBS, when you want true market growth, like if you have a large enough portfolio and you have IRAs and non-IRAs and then you have a Roth, you've converted some money to Roth, in my opinion, that Roth IRA should be used for real market growth. And anytime you want real market growth, in my opinion, you should never, ever, 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 ever buy annuities of any type. I mean, period. That's just my opinion. I know you're going to hear differently out in the hinterlands of the annuity world, but I'm just telling you, that's my opinion, and it's a very experienced opinion and a factual opinion. But let's just say, you know, Stan, we still want to use the annuities inside of a Roth. Well, the Roth money's already been taxed, and then, unless our friends in D.C. change the rules, which they could, I guess, but and you might be grandfathered in if they do, you can put, you know, everything but a qualified longevity annuity contract inside of a Roth IRA. You can, and the money coming out is going to be tax-free, which is a good thing. So I do have clients that say, you know what, we want a lifetime income stream. We want it to start right now. So, you know, that's an immediate annuity. Again, my two questions, what do you want the money to contractually do, and when do you want those contractual guarantees to start? That's what I use to determine what type of annuity is going to provide the highest contractual guarantee. So in this case, an immediate annuity, they bought it with Roth IRA money, and that immediate annuity income coming to them every single month is tax-free. Pretty good deal. So, you know, Roth IRAs, non-IRAs, it really doesn't matter where you place that annuity. You know, qualified longevity annuity contracts, the only one with the rules that it's just the traditional IRA or there's some retirement account 401k type areas that are allowing those in, but the vast majority are in traditional IRAs. But you really can use annuities in any account type. The question is why? The question is should you? And then if we decide that it makes sense, then the difference is just the taxation of the money coming out when you take money out. Now, with all that being said, this is a great example of why me and you need to talk and have a conversation. And if you continue to watch these videos, video after video, and listen to my podcast called Fun with Annuities, and you've read my books, but yet you still haven't engaged to talk to me, this is the reason you need to, because I'm going to shoot it straight and be brutally factual and honest on which account type that I think you should use. So if you got a call the other day, great story. This guy calls me and he goes, first of all, I should have said, hey, why didn't you set an appointment? But anyway, he called me. You can call me, 1-800-509-6473, and I typically answer my own phones. And he said the following. I'm thinking about buying a lifetime income stream, and he told me all the parameters when he wanted to start, but I'm not sure which account type to use. Now, do I give investment advice with anything other than annuities? No, I'm an annuity specialist, Stan the Annuity Man, top independent agent in the country, America's annuity agent. But the conversation we had was fantastic because I asked him broad questions about his overall portfolio. You know, how much is in your traditional IRA? Do you have a Roth IRA? How much is in your cash checking account type positions? And then from there, we made a very good decision on where the annuity contractual guarantee should go for him. And it wasn't what he was thinking. You know, my decades and decades and decades of experience, I've been to that rodeo. There's not annuity rodeo I hadn't been to. So I gave him my opinion. He was very happy with what we came up with from a contractual guaranteed standpoint. And he was really happy because I pointed him to the right account type to use. So that's a great story, and it's probably your story as well, because if you're considering an annuity and you have, or of any type, and remember there's different types of annuities, you need to make sure you're putting that annuity type in the right account. All right, so the bottom line, can you buy an annuity inside of an IRA, a Roth IRA, or a non-IRA? The answer is yes. The real question is, should you? And that's when I encourage you to go to my site, The Annuity Man, get my books, run quotes, schedule a call, do all that stuff. But hit the subscribe button. I'll see you on the next YouTube video.